All right, we are live. What's up, Punch Card? So we've got a very special guest today. We've got Jason from the After Dinner Investor in the house. Have you eaten dinner already, Jason?
Yeah, we did have dinner.
Okay.
I'm sure you're interested, so I'll go on. We baked some chicken, and we had whipped potatoes and broccoli, and it was pretty good. Guys are
Beautiful.
catching me at a good time. Haven't had dessert yet, so I do have that planned as well. We have some pumpkin pie and some ice cream. So,
Are you going to have dessert on screen, or are you going to wait till we're done, just so I can be prepared?
um, not on screen, not on screen.
Okay.
We should do the super investor sip, though.
You want to do it?
Yeah, let's do it.
Okay, let's do it live. Everyone, grab your favorite drink. Brad, you got something there?
I got
You got
something. Yeah.
a juice cleanse or
I don't
something
know
like
if
that?
I have a tea. I have a tea.
Okay. Nothing green that you're only
Nothing
drinking the whole
green.
week?
No,
Okay.
it's transparent.
Okay. Grab your favorite drink. Mine is coffee. Tonight I have a green tea. And let's remember the three things Ben Graham taught us to become super investors. Number one, a stock is not just a piece of paper, it's ownership in a real business. Number two, Mr. Market is there to serve us and provide us with opportunities. And number three, the most important one, always invest. Like Quran, always invest with a margin of safety. So we'll take our sip here and become super investors.
Beautiful.
Don't clone us, though. Like, please, if
None of this is investment advice, Karan says. Yes, agreed. Tom's going to grab a beer. That's good. We've got Tom in the audience. If any of you, you can't heckle him on screen, but you can heckle him in the chat if you so desire. So today we're going to talk about cloning. Okay, the title is Cloning 101. I can't read the full title, Karan. Pabrai's cloning
mental model.
Cloning mental model. Okay. Yeah, that's obviously a very big one for Pabrai. He attributes a lot of his kind of outperformance to that particular mental model. And this is going to be pretty freewheeling, this session, guys. So if you have any questions about cloning, throw them in the chat. We're probably going to be checking throughout the course of the live stream here. And I just want to share today, I got my Pfizer booster. So there could be things happening to my body as we go through this live stream. I'm not really sure what's going to transpire, but just wanted to throw that out there as well. So shall we jump into a quick convo about cloning?
Yeah. I guess to me, the first question is cloning seems to be different to everybody. So I guess my question to you guys is, what does cloning mean to you? Does it mean you just copy what the people you follow do, or do you put some kind of spin on it, or is it just a general mindset in business that you kind of think about from time to time? Mm-hmm. What do you think, Karan?
I think it makes sense to. It's more like a watch list generation sort of thing, like ideas and concepts that you might want to replicate if they make sense to you. So I'm not saying be a shameless cloner, don't blindly clone things, but if something makes sense to you, then replicate that. And that doesn't only apply to investing. I think it applies to running a business, life in general. If you see someone practicing something good, like for example, Guy Spears' habit about writing thank you notes, I think that's a good habit. So you can incorporate that in your life.
Yeah, I agree that it's not just about investing. I've got a Post-it note on my desktop here that says clone always. And the always means not just about investing, but also about just business and family life, everything that you think is a good idea. One example of that is I have another Post-it note that says tell the truth like Monish, because I think recently in a Richer, Wiser, Happier, he was talking about how he just, from the Power versus Force book, he decided, I'm just going to start telling the truth and see what happens. And I thought that was kind of a cool idea to clone. So I'm mostly, I think with you, I just kind of use it as a mindset. I don't, sometimes I clone shamelessly where it's just, I just buy what they buy. But it's more so a mindset. What about you, Brad?
Yeah, well, as you guys are talking, one thing that's coming up is a story that Pabrai shared where I think he read it from a book written by Tom Peters, and there were these two gas stations right there, kind of kitty corner across from each other.
Yeah.
And one gas station, the owner decides, okay, every hour I'm going to go out and I'm going to give full service treatment to one of my customers, right? I'm going to pump the gas for him. I'm going to clean the windshield. I'm going to do all this stuff kind of above and beyond what's expected. And the gas station owner across the street is looking at this and he's like, well, that's stupid. Why is he doing that? He can't do it for everyone. So why do it for just a couple of people, right? And over time, it became clear that this method, this going out every hour and giving this free full service treatment, was actually growing the business. Like there were more and more people going to that gas station as opposed to the other one. And even though the owner who wasn't doing this could clearly see that there was something happening, that this was working, he didn't clone it. And so I think the big thing for Pabrai that he forced himself to do is when he sees other people executing great ideas, to force himself to clone those, to copy those, because I know there's something in our wiring, there's something in the majority of humans' wiring that we're resistant to copying great ideas that we see other people doing. And I think part of that is just going through school. You're not supposed to cheat. You're not supposed to look at other people's tests. You're supposed to stay in your own lane in a lot of ways and have original work and all of this. But when it comes to investing, there's no extra returns. There's no extra credit for doing original work. So if we can kind of peer into the portfolios of the greatest investors in the world, it's kind of ridiculous not to do that when that's right there in front of us. So I think for me, it's similar to Quran, where cloning, it's a way to narrow the universe of opportunities that I'm looking at from 50-some thousand global public companies down to maybe a couple hundred opportunities where great investors have plowed money into these things recently. So that's how I use it. It's a funnel to really narrow down what I look at.
I think the reason I think about it so much and that use that word cloning so much is because probably the biggest thing it means to me is just to remind myself to actually do it. Because I want to keep it top of mind, because as you were talking, like, yes, it is kind of built into us. Don't copy, do your own thing, all that kind of stuff through school. But I was just thinking possibly it could be even deeper than that. Some kind of wiring in the human species, because it could be some kind of evolutionary thing where if we all did the same thing, and then some disease came or something, or we all went to the wrong place and got wiped out, it wouldn't be good for the growth of the species. And so maybe there's something built into us in terms of just trying to think independently, or at least think we're thinking independently and not clone per se. But it's also an ego thing too. People, I mean, it's easy for us here on YouTube to say like, hey, we're shameless cloners. We think it's a great opportunity. We're happy to do it. Kind of put yourself in the shoes of someone getting paid like $100 million a year or $50 million a year, like telling their boss or their clients, like, yeah, my strategy is I just kind of clone and see what other people are doing. And you could do it too and just not pay me $50 million. It's kind of probably tough for those people to kind of talk about that. So I think that's another reason why it doesn't get played up.
Yeah. Ego is definitely a big factor. I mean, a lot of people want to show that they've come up with an original idea, even if it's not a good idea. Sometimes it's better to just clone someone else's good idea and build on that. But it's difficult for people to do that. Yeah.
So I think one thing people might kind of challenge us so-called cloners on is, how can you call it cloning if all of us say it's more of a feel thing? One book I'm reading right now is Joel Greenblatt's original book, and
You Can Be a Stock Market Genius.
Yeah, I don't know if it was in that book now that I'm saying that, or if I saw it in some article, or if it was in Richer, Wiser, Happier, but I think he said something to the effect of, we put this magic formula out there, and it's about, you have to invest in the stocks it tells you to invest in to get the results that we've gotten from it. And he said a lot of people don't do that. So I think some people might ask us, can you be a cloner if you're not mechanical? Like if you guys are gonna clone, say, Monish in an investment, how do you decide if you're gonna clone them in Alibaba versus something else or whatever in something else? Like, is that still cloning, or is that just us calling it cloning?
Well, I mean, Pabrai is a self-proclaimed cloner, right? And that doesn't mean, there's investors that he looks at and he'll automatically buy what they're buying. I mean, maybe I'd say the investor that's probably closest to that for him is Charlie Munger. But, that it's really just top of the funnel for him. He's a cloner, but the cloning is really just one aspect of his process.
Do you get curious what could happen if you just mechanical? Are you thinking about doing a portfolio or something for that?
I am very curious about that. And, I've been tinkering with the idea of, so I have this magic formula, mechanical portfolio that I do. And I've been noodling with the idea of kind of switching over to more of a shameless cloner portfolio. I should probably do both just to continue to collect data. Maybe I could even scale back the amounts that I put in and still be able to collect the returns.
Mm-hmm.
But yeah, it's definitely something I want to explore. I know Tom set something like that up recently where he started a cloning portfolio. Yeah, I'm very intrigued by it. How about
If
you?
you're cloning all the ideas, at that point, doesn't it make sense to just be invested? For example, if you're cloning Buffett's ideas, isn't it better to be invested in Berkshire Hathaway or Bill Ackman's Pershing Square? Better to just
That's
directly.
fair, but a lot of these 13F guys, they've got minimum investments, which 2 of the 3 hosts on tonight's show can't make,
Right.
but 1 might be able to. So yeah, some guys we can't invest in some of these hedge funds where the minimum is like $1 million or $5 million.
Fair.
Yeah.
But I mean, there are some publicly listed ones, which I mean,
True.
Pershing Square is one
Very
of
true.
them. So
I ask myself that, like, sometimes I'll buy like I just did it. I bought the flooring company that Berkshire Hathaway bought in their last 13F, and I think, like, okay, now I'm gonna go down this rabbit hole and spend a lot of time looking at that. I could just buy Berkshire Hathaway and do pretty fine and not put any work into it or take any time, but I think part of it is you just want to kind of dig and try to think the way they think. I think that's one benefit you can do by going after their individual investments and not investing with them, is try to think like why do they think this is attractive? And like that flooring company, you look at it like at a surface level, and like I think the PE is like in the 40s or 50s. I think the book value is like 6 to 10 or something like that, and you're like, why did they invest in this? And then I had the breakthrough recently. I was thinking about that, and I was like, well, duh, because they're not looking at statistics on Yahoo Finance that say this is the price to book, this is the PE value. They're not looking at, like Wayne Gretzky's saying, they're not looking at where the puck is, they're looking at where it's going. And as simple as that sounds, it kind of explained to me, like, oh, this is why some of these super investors, these value investors, will buy a company that's a 50 PE, because it doesn't matter what the floor company's sales were in the last 5 years. What matters is what their sales are going to be in 5 years. And then a lot of people are saying, like, all of a sudden everybody wants an office, but they also want to be able to work from home. And at least here in America, the amount of real estate ground that people want has kind of expanded during all this, and so that might totally change this company's business. So I get a lot of benefit from just trying to put the puzzle together. Why did they think something was attractive? And then I think you got to be careful sometimes too, because these guys are just humans, and as much as we look up to them, and sometimes they do have stretches of bad performance. And I think for some of the so-called super investors, sometimes that bad performance becomes very clearly like just bad decisions they made over stretches of time. and you kind of got to check yourself and go, okay. So I even just judge the people sometimes. I try to judge where they're at in their life and if they're making sound decisions and if there's someone I still want to be cloning. So yeah, it's a very, very interesting topic. We've been talking about Monish, Bill Ackman, those kind of guys, Buffett, Berkshire. What do you guys think about cloning small, quote unquote, small investors? Something I've been very much wanting to get into more lately. Does that make up a big part of your cloning activity, or are you just looking at the big guys?
Yeah, it doesn't make up much yet, but it's something I'm wanting to spend more and more time on, identifying these smaller, kind of up and coming investors that will be on Dataroma in the next 5 or 10 years, right? So Andrew Rosenblum from Bonsai Partners is one of these guys. I mean, his fund has only been around for 3 years. Okay, so and I think he's managing probably under $20 million.
Really?
So
I
yeah,
didn't know it was that level. I knew he was under 100 million. I've heard you and some other guys talk about it. That's I'm wondering, how do you make that work? I guess you have to get really good investment results fast to make the income, or just have a long-term approach.
Yeah, which he does.
Mm-hmm.
And yeah, so he bought into Micron, he bought into Redbubble. He's had a couple. I think Redbubble has done very well for him, but more than his returns over the last 3 years, what really drew me to him was reading his letters to investors. And there's so much that you can tell about an investor and how they see the world, how they see their investment portfolio, what kind of framework they're looking through. And Andrew I just find his writing and his thought processes very, very lucid. I've been impressed with him.
I think another benefit of following smaller investors is they're more relatable, and so that's one reason I want to get into it. When you follow the billionaires, one of them happens to be 96 years old. He happens
97, I think. Are we
97
talking
now.
about the same guy?
Well, we're talking about the guy that seems to get pleasure out of his stocks going down 50%, and it doesn't cause him any problems.
I think we are talking about.
If you clone guys like that, and I run into this when I clone insiders at companies, CEOs, board members, stuff like that. Not saying this with Charlie, but sometimes with these CEOs, I don't know, them losing on an investment, sometimes it just doesn't matter as much as it would to someone like us if we're putting in 15, 20% bets. So I have a feeling these smaller investors, where they just can't afford to lose right now, might be more relatable in that sense. Not saying all the billionaires don't focus on margin of safety. Obviously they do. That's how they got there. But maybe the smaller guys are hyper focused on it. Do you guys get ideas from listeners of the show, from watchers on your YouTube channels?
Not as many. Not really.
What about you, Brad?
Yeah,
Brad,
for
I
me,
think you get quite a few. Yeah.
For me, it's happening more and more. I think just because a lot of my subscribers, we follow the same people, and so I just get a lot of messages that are right up my alley in terms of, oh yeah, that's something I would have wanted to know about. So that's been great, but I'm usually pretty hesitant to spend time really looking at something unless it passes through this filter of an investor that I'm tracking, having bought it recently.
Really? So you're gonna keep that filter on, even though you might miss something.
Yes,
that someone sends in.
I'm not worried about
Disciplined,
missing
yeah.
something.
Wow. I'm
much more protective of my time in terms of not wasting time on too many ideas. That's how I'm oriented right now.
I think even when you look at smaller investors, like, people always think that the returns, if you want to get like outsized returns, you have to go for small cap companies.
Right.
I really don't believe that's the case.
Yeah.
I think you can make a good return, a satisfactory return, even investing in larger companies. So.
Yeah. So, for example, on that front, Chris Meyer, the author of 100 Baggers, manages somewhere around 50 million, I think. And he has one company out of 11 in his portfolio that's not a large cap. Okay, one that's like a mid cap. So, and he's spent thousands of hours, I think, studying the DNA of these 100 baggers. So, that's just one data point, obviously, but I think it's a useful data point to Karan's point of not, being singularly focused on these micro and small caps to the exclusion of, great opportunities in the large cap space.
Yeah, I do a mix of both.
Yeah.
Oh, we got a message from Frank.
Frank.
Yeah, Frank's biggest return has been a small cap in Australia. So
Yeah.
Did he mention that on the show, or I'm wondering?
Sorry, did he mention? Oh,
Yeah,
yeah.
had he
talked about it
mentioned
a
that
lot.
one? Okay,
Yeah.
he's mentioned that one. Okay,
It's how
a
we
few
know.
times, yeah, a little bit.
Yeah.
okay, yeah. I will say, just like Frank has knocked it out of the park with I think Kelly Partners. I had a successful investment in a small company called Ring Energy. I had a successful investment in a big company called Apple, and I can tell you that the Apple one has been very fun, and it's been very low stress, because it truly is like a hold forever, as long as the business is getting better and as long as it's not egregiously overvalued. I really do plan on continuing to hold it. And it's like a very nice peace of mind thing to be in a huge company like that, just in terms of like kind of a wealth preservation thing. But in terms of like wealth growth fast, once you do get one of those like 3 to 4 baggers out of like a small cap company, and quickly, it kind of becomes a little bit addictive. But at the same time, I know that during market crashes, I really kind of don't feel right sometimes if like too much of my portfolio is in stuff that's not quality, even though maybe that's not the best absolute return strategy. So I kind of like to have a mix, kind of protecting me during those downtimes to give me peace of mind.
Yeah, the quick hits where you buy in and it pops. I think there's a bit of danger there, and I think this is what Charlie Munger is referring to when he talks about crypto as being rat
Mhm.
poison. I was watching something on Twitter where Charlie Munger was just tearing down these kind of get rich quick schemers on YouTube and other platforms. Um, they're basically selling heroin. Okay, it's such a drug to see those really fast rises in the things you own.
Brad,
Um,
you are coming out swinging tonight.
I
I
mean,
don't know
yeah,
if it's that
it's
booster
something
shot or
it's
we've got a
something
new
I've
side effect here,
it's
but
something
man,
I've
you are
really been thinking about.
didn't you
swinging at
10x
everybody.
on Dogecoin or something?
I did well on Dogecoin. That was a silly little experiment, but yeah, it can really rewire you for short term performance, and that's a whole different game than what a lot of these great investors are playing.
Well, it is a different game, and that's something I've been struggling with lately. Is like I've got one portfolio, a pool of money, and like some of it is in stuff like Apple, Prosus, Alibaba, just stuff where I've just got to ignore everything. I got to think, okay, I'm not going to do anything with this stuff for 5, 10 years, maybe 30 years. But then I've got this other part of the portfolio where like I've got to follow the company like on a month to month basis. There's wild swings in the stock prices, and you've got to decide, okay, is now a time to sell, or should I be buying more? And what do I buy more with? Like, do I sell the good stuff? So I've almost been trying to think, like, is there a way to kind of have two portfolios yourself, where one is kind of your wonderful business permanent capital portfolio, and one is kind of a aggressive kind of like capitalist on the ground hunting for bargains kind of portfolio. And one thing that's tough for me is these people like Warren Buffett, Charlie Munger. I don't think with $1 million, with $100,000, they would be in the stocks they're in now in the big caps. I think they would be doing what they did in the 50s to the 70s, but they just haven't talked that way, or invested that way in so long, it seems like a lot of people forget that that's what kind of got them there in the first place. So trying to balance those two strategies has been thinking a lot about it lately.
Yeah. Do you guys know when Buffett bought into Geico, what was I'm sure this would be easy to look up, but what was the market cap of Geico? And was it considered small, medium, and large? There were probably different ranges for those, right? 6 or 7 decades ago.
It
But I'm
must have
very
been
curious about
must
that.
have been it was small enough for him to go there on a Saturday afternoon and someone let him in and he got to talk to an executive. It couldn't have been too big, and I don't think it was too far past the founding of the company. I think there was a founder, and then it went south for a little bit, and then he got in there. But yeah, I don't think it was big at all. And then if there's a fantastic book called like The Investments of Warren Buffett or something like that, where this guy went and looked at like 10 investments that Buffett made way back in the day, and he kind of like broke down, and like one of them was like a company that mapped out buildings and sold those maps to insurance companies. I think another example was this mill company. So he was doing a lot of different things back then compared to the kind of long-term wonderful business approach now that he's been doing.
But so Frank mentions that here. He started off in small liquid securities, but he actually went and he played the role of an activist, where he saw that there was more cash or something, and he was able to extract that from management. It was, I think, very different compared to even the 70s, I think. So the initial days of the partnership were very activist focused, right? Wasn't it?
Well, yeah, I mean, like the very, very early days, but then as you got, I think in the 1960s, where he wasn't known as the Warren Buffett he is now, he was still working with a relatively small amount of capital. He was in things like Disney, I think, for a time. He was in American Express very early. So he seemed to be able to walk that kind of balance of like small illiquid stuff versus mega cap stuff. And maybe I've been thinking too much about it, and maybe it's because everybody talks about it too much, like the small cap versus big cap thing. But yeah. So question I have, cloning sounds great. Everybody has a plan until they get punched in the face, Mike Tyson. What do you do if your super investor sells at a time where you would not expect them to sell, and you're sitting on a big investment?
Like what happened with Pabrai recently, for example.
Well, we got a real-time reaction here. So it happened to me. I know, Brad, it happened to you to a large extent. So what did you do? What's going on with that investment?
You can clone the idea, not the conviction. That's what we're learning here.
Yeah, that's a nice little sound bite.
And just so we're current with everyone, I'm just gonna look it up real quick because I don't know. I know Brad doesn't check the stock every day because he's disciplined, but it was down
today. I think it was like 111 from what I saw today. I don't usually look.
I'll let you round up. It's 111.96, so we'll call it 112.
Okay.
But it was down 8% on the day. And then over 1 year since the first quarter, 225, 226, we are down finally a nice 50%. So you see the 13F comes out in Q3. What was your initial reaction? I'm curious.
Did anyone buy yesterday? Was any changes?
Nope, not for me. I haven't done a thing with it. I added maybe a month ago. I don't quite remember. It was somewhere around 145, 150, I think. It wasn't a big ad, but really I'm just planning on sitting on it and looking at it as little as possible.
Now, is that because you did work before you cloned and you're confident in your judgment after the initial idea, and you're comfortable?
I did enough work where I feel comfortable. I don't need to pay attention to what the gurus that kind of prompted me to get into it are doing. So, yeah, I'm just going to let that one ride.
Interesting.
I added to the position yesterday.
You added to it, Karan?
I added to it. I added 5% of my portfolio yesterday.
I've added like once or twice on this way down. one thing I've been thinking about with Alibaba is I really like the Tencent Prosus story, and I looked into Prosus, not just shameless cloning, even though I will anytime. It's just I looked into it, and where I came out on like Prosus was you were buying dollars for like basically 60 cents, and 80 cents of that dollar was Tencent. And so I've just been more attracted to the Tencent story recently than Alibaba, and for some reason it just I kind of grouped them together. But I think the bigger thing with Alibaba is if this was any other huge tech company, wonderful business that had dropped by 50%, a lot of people would have been diving in there and excited that it would have gone down. But there seems to be a feel in kind of the value investing YouTube community where like people just don't really want to think about it. They don't want to talk about it. They're not taking classic value investor action here, where it's like if you like something at 225, you should be loving it at 112, like loving it, like dumping in a bunch of money, especially for a wonderful business. If it was Amazon, that would be happening. If it was Microsoft, that would be happening. But it's not. It's Alibaba in China. And I think the reasons why people are selling Alibaba is the reasons why us value investors are maybe hesitant to dive in even more, because I think it's fair to say no one really knows what's going to happen. I don't think it's likely that we'll be in big trouble with this investment, but it's very different than the way we run things over here in terms of investors. Is my read on the situation, and I'm asking myself, am I making a mistake reading too much into that? Should I be diving into it as if it was Amazon or something like that? But I don't feel comfortable at this point doing that, diving in even more.
Well, I think it brings up a nuance of investor psychology here and of investor emotion where, obviously if you buy something at 200 and it goes down to 111 or 112, it should be more compelling. But there's more to it than that, right? There's Guy Spear in a recent talk talked about position sizing and how really getting clear on his approach to position sizing has been such a help to him in weathering the emotional ups and downs with these, with the price swing whiplash.
Mhm.
So, just blindly doubling down as something goes down, there's a real risk there of becoming overexposed to one position. And I don't think people talk about that enough. And it's something I've thought about a lot as Alibaba continues to fall. Even though it's more attractive now, I don't necessarily want to keep, making it a bigger and bigger chunk of my portfolio, at least on a cost basis.
Mm-hmm.
So that's something I've been thinking about.
Then, Brad, if suppose someone buys in at these levels and then say the way it's just fallen like 20% in the last month, it goes up 20% in the next month. You could always average out the position, lower your cost basis now, and then it kind of does sound like trading, but maybe it's not a bad thing to kind of trade when there is irrationality in the market. How do you guys feel about that? I know we're like completely against trading, but I mean, I'm a little more inclined to, if you see opportunity, take advantage of the opportunity.
Yeah, I think it kind of plays into your personality, right? We're each going to have a little bit of a different style, even if we follow kind of the same core tenets of value investing. So, yeah.
I think I definitely go get into more of that trading mindset on the way down. I look for opportunities to just get more in there, but on the way up, I'm very kind of slow and just kind of like, okay, I did think it was going to go at some point. Let me take my time here. I think part of that is the tax implications of short-term sells, which are no fun. But yeah, I definitely have more of that mindset when something's dropping quickly. And I could just say from the experience with Ring Energy in 2000, I think 2020, nobody, it seemed like nobody wanted to buy get oil stocks during 2020 for obvious reasons. but you just were getting the feeling as like a shareholder in one of these companies, like it doesn't matter what is in the company. Small investors don't want it, and big institutional investors definitely don't want it. That happened with oil in 2020, and then oil came back, and those stocks have done very well. And I'm kind of getting the feel there with Chinese stocks like Alibaba. It doesn't matter. People are not looking at what their cash position is. People
Right.
are not looking at their third stake in Tencent, or not Tencent, but in Alipay or Ant Financial, and they're not kind of going, okay, maybe it's not worth what it was, but it's still worth something. They're not thinking that way. They're not thinking about the free cash flow. They're not thinking about the growth. It just seems like people want nothing to do with those stocks over there, and that could provide a lot of opportunity if it ends up working out the right way, and they kind of don't go too far with that regulation in terms of investors.
It's still, consider everything. It's still one of the best businesses in the world for 300 billion. I mean, it seems kind of ridiculous, at least to me.
I hadn't really thought it got to the ridiculous level until this last week, where it went down another 20%. And now I'm running the net cash numbers and taking away the cash. And now I'm saying, okay, maybe Ant Financial is not going to IPO for 300 billion and their stake's worth 100 billion. Maybe it's $100 billion company and their stake is worth 30 billion. It's worth something. And now it's getting to the point where it does seem to be getting a little bit ridiculous. And I think that stems from the fact that people are not making their decisions right now based on the company. They're making it based on other factors. And so if we can take Brad's approach here and be very, very long term, that's how I'm kind of talking to myself about the investment right now.
Karan, have you looked at leaps at all on Baba as it just continues to plummet? Or have those gotten attractive to you?
I still am trying to figure out options, but I did purchase some leaps also yesterday.
Okay.
It's like a $200 strike for 2024.
Nice.
Which I found they were quite reasonably priced. You could make a decent upside, and I think that the business would. I mean, I know it's a bit of speculation there, but it makes sense. I mean, 2024 is, we've got time.
Oh yeah. Karan, I sent you something behind the scenes here. I posted this on Twitter. It's kind of a snapshot of Buffett's holdings at the end of 1962, just so people can get a sense, was he really concentrated like he kind of preaches today, or was it a different approach? Can you open that private chat, Karan?
Sure.
Of course, to tell if you can read that.
I think Buffett wrote it, so I don't know that anybody's going to be able to read it, but it's kind of a cool artifact of history. You can click on the actual image.
I think I see the word Dempster there, right in the middle. That's Mill. I think we see Berkshire, obviously.
Can you blow it up at all, Karan, or no?
Not sure how to zoom in on that.
Can you not just click the image?
I think this is a good moment to thank Jack for the work he does week to week as the host of the show.
Oh man, he rocks it. Absolutely. You're doing just great too, Karan. Appreciate your efforts. Should we dive into some comments, or do you guys have anything else you wanted to explore today? Oh, I wanted to mention one thing. So when I saw Tom wasn't going to make it today, I had this thought, well, what if we do a tribute to Tom and we pull up one of his old original YouTube videos just to really honor the journey that Tom has made? I don't think we're going to do that, but let us know in the chat if that's something you guys would be interested in. When
is it the rule of 72?
It might be running through the park. We may do that. We may implement that in future episodes when people aren't able to be here. So vote in the chat.
Sorry, guys. I just one more thing before question. I just can't get my mind off Alibaba. So I looked up their annual report 2021 because I was looking for their free cash flow. It looks like it's $26 billion. And their market cap today, it's 300 billion. And so Karan, do you know their net cash? Is it like 40 or 60 billion, something like
I
that?
think it was. I don't remember the exact number. No.
Okay, so call it 40. I mean, now we're talking 260. I mean, is that 10 times free
It
cash
is. It's
flow?
10 times free cash
And you
flow.
and you count Amp Financial as nothing. So yeah, it's getting a little silly out there.
There you go. Not financial advice. Do your own homework, but
Don't worry, Brad. We can't convince anyone to buy Baba. Like no one.
Yeah, no. Why
right.
did you even say that, Brad? No one's buying it.
It's like being the gas station. You know, they're doing this thing that's working, and the other guy's not listening. That's okay. And I will say on that note, I really want to surround myself with Baba bears. Okay, I find it's so easy to get ourselves surrounded in this echo chamber of people who think the same way we do. And I think there's so much value to, and Karan has mentioned this before. He's in eToro. I guess it's fairly easy to see in eToro who's shorting different companies and strike up a chat with them. That's such a valuable thing to be able to do. You guys seeing anything in the chat that we should pick up here?
I'm looking through. You guys are very skilled to be able to look at the chat, and usually I'm in the chat.
That's right. You
Have
are
you
usually
bought anything recently in the last week or so? Has anyone bought anything?
Well, Karan has.
I've bought Seritage and Discovery and Baba. So.
Well, I asked Brad in a live chat of one of his videos if he was excited by the Seritage drop, and he squashed my comment. He said, "No, it hasn't dropped enough to even talk about." Next comment.
Well, I guess we're not all in that boat. That's good. We have some diversity here on the channel.
Yeah, but I've been thinking about Seritage just as it drops more and more. Brad, let me ask you that Eddie Lampert changing his whatever they are units to shares, the video you made.
Yeah.
Does that mean anything? Like, did anything happen, or did he just kind of change the way he calls his shares?
Well, so from my perspective, he has more liquidity now than he had when most of what he held were operating partnership units. I don't think we know anything other than that. But you know, I don't know why else he would convert. I'm not an attorney. I don't know how the operating partnership units, you know, why they even include those and what the benefits are.
Yeah.
So I couldn't scratch the surface on hypothesizing why he may have done that. But I could see why people might be concerned about that. So, I mean, it basically gets him one step closer to being able to unload things quickly. But it hasn't changed. It hasn't changed anything for me as an investment in SRG.
So I see a comment here from Sandeep. If you want to pull it up, need to talk more about Baba Cloud business. It's the real moat in the making. And I'll do something here for you, Brad. I'll play the bear here.
Good.
A lot, because I was thinking this to myself the other day. It's kind of the way common talk now for all of us Alibaba investors to say, "Oh, well, just wait till they start rolling out the cloud and that business grows." And there's only a few dominant cloud companies when a cloud economy matures, and they're going to be one of them, and we're going to make all this money. And I had the thought is, well, that's the way it developed in the United States with Amazon and Microsoft. A big number one, a big number two, a smaller number three, smaller number four, and then basically almost no one. There's no guarantee that business is going to develop the same way in China, just like their credit card business never developed because they had mobile phones, and then payments went to mobile phones and developed differently than it did here. So I hope it works out that way. I'm definitely looking for news on that as stuff comes out. But I was thinking, you know, maybe it won't go that way because maybe their system is just a lot different.
Yeah. Do you have any thoughts on that, Karan?
About the cloud business?
Yeah.
Not really. I mean, it needs to develop. Right now, it's still relatively small. It is growing quickly, but I'm just focused on the e-commerce business, what we're able to buy relatively to the discount to the e-commerce business. That's my focus.
Mhm.
Everything else is just cream on top.
Yeah.
And Karan, are you worried about the way everyone's talking in the last quarter with like, oh, they only grew this much and
I bought more
JD.com and all these
yesterday.
other stuff?
Like,
But
I
what
bought.
why don't you share that concern that Mr. Market does right now with the competitors in e-commerce, if you don't mind?
Well, it's a way of thinking, I guess. I mean, that's kind of, again, it goes back to wiring and what we're comfortable with respect to our portfolio. So I see the risk. Yes, I see the risk like everyone else, but the upside that I see justifies the risk that's there. So I'm like, yes, I will buy more at this point.
Gotcha. So Bradley made a comment here. Cloud bear case. It will be a commodity in 30 years. And I was thinking that about 5 years ago with Amazon. I was kind of like, well, who cares if they sell storage? Look at the brick and mortar storage business. It's not really knocking it out of the park. It's a commodity. But the more I kind of follow that industry, it just seems like once you have a head start in cloud, you create more and more services that businesses want to buy and they get locked in. And I've kind of changed my position on that it's not, I no longer think of it as a commodity. It's too tech and it's too advanced for me, I think, for it to become a commodity.
Yep. Jason, I want to just touch on something you said regarding, people getting out of Alibaba because of the competition in China. It's really easy to look at the talking heads on TV or the people we perceive as experts telling us why something is happening and believing that that's the reason. And, in investing, there are so many different reasons that things could happen. And I think it can really be a mistake to think we know why something is happening. So I just wanted to point that out. All we know is that there's more money flowing out of Alibaba in terms of the equity than is flowing in. We can speculate all day about why that is, but I just wanted to point that out.
No, that's a good point. So Karan, do you mind speaking about Discovery? I was in Discovery. Speaking of cloning, I cloned John Malone. He did a CNBC interview in like 2019, and he talked about why he bought the stock at 29, why he bought it at 21 and 19. And at the time, it was selling for like 23, 24, 25, kind of where it is today. When I bought it, I kind of looked at it as like, okay, I'm getting, I think at the time, like a free cash flow yield of like something like 20% or something like that.
Wow.
It's not a huge growing business because this was before their merger, but a stable business. And I use their products. That's the kind of entertainment I watch. And it worked out because someone in New York City was doing some stuff and the stock price went up to like 80. And I sold half my position. Then recently I've sold a lot of it or all the rest of it at like 40. But now it's back to where I bought it. So I'm kind of thinking, hey, I should buy it again. And also because with this merger, I'm trying to understand how much it's going to be worth after the merger. But what's attractive to you about it right now?
Did you read the recent S4 filing?
No, not yet.
Okay. I kind of want to duck anything related to Discovery until the merger goes through, because I've had two companies in the portfolio whose plan hasn't worked out recently, Pershing Square and Equity Commonwealth. So I'm like, I'd rather just wait and wait it out the merger, like until it happens. I mean, I have an idea about what I think the 29% stake is worth, but I'm not going to make any comments on it about any of it until the merger actually goes through.
I want to ask a follow-up so bad. I mean, you don't have to answer, but I can ask. It sounds like the investment idea was from the whole situation with the merger. It wasn't their standalone business.
That's what, even if the merger does fall apart, it makes sense, but it's not why I'm in there. I'm in there for the merger. I'm in there for the larger business. If that doesn't work out,
Well, I got to say, from a competitive perspective, I totally get what they're doing with Warner and HBO Max combined with Discovery. To me, I know John Malone talks a lot about chopping it up and offering a bunch of different streaming options for people. But for me, you've got Netflix, you've got Disney Plus, and then if you combined HBO Max with Discovery, there's no reason why so many households wouldn't want to pay $12, $15 a month for those offerings. To me, it's quality stuff, and I also think they've got the best person on planet Earth
Yep.
for that job, to run that job, David Zaslow. So yeah, it's a very interesting situation, and the most interesting thing about it is that the price is all the way back down where it was a couple years ago, as if the merger hadn't even gotten announced. So we'll
The
leave it there.
management is so good that it kind of got me to sell out of Twitter. I had to compare the management of Discovery versus management of Twitter. And that was one of the factors that actually got me selling out of Twitter and saying, this is the kind of management I want to be invested in. That is not the kind of management I want to be invested in. So, yeah,
Definitely.
with you on
Definitely. Say that again, Karan. You broke up.
that. No, I'm with you on that, that he is kind of the right person.
Oh
to
yeah, for
lead the new
sure.
company.
I'm actually listening to the John Malone biography. I think it's called Cable Cowboy, and it kind of talks about one of his management strategies is finding very good managers and paying them more than anybody else would pay him, and it worked out.
He holds the B shares, right, with 10 votes per share. John Malone.
I know as part of the merger, he agreed to give up his super voting powers.
Yes.
And I think he has like a little bit of all kinds of shares with that company, like all different versions. Because I've seen in different filings where I think I've seen, but yeah, he definitely at the time, or at least right now, has super voting, but that's going to go away if this thing happens.
I haven't built a full position in Discovery because of the merger. Like, I'm still hesitant. I think it's just because of what I've seen over the past 12 months. It's still just a 7%, 8%
Well,
position.
I mean, to say a bull case, say the merger doesn't go through. I mean, what's it going to do? Go down 30% from here? It doesn't seem like it should. The one thing that kind of scares me with the merger is the debt. I think there's going to be a lot of debt on the company, but I don't know if that necessarily matters with their business model. But that's one concern. The other problem is I don't think I'm very smart in a lot of places, and trying to figure out that merger and what Discovery's going to be worth and how the whole thing is valued. I've had a little bit of a tough time. I haven't really tried to dig into it, but it's not as simple as another company where they say, okay, we're going to buy you for this. And then you're like, okay, it's going to be worth that. It's a little bit complex.
You're talking about the reverse Morris aspect of it, or
Say that again. Sorry, Karan.
the reverse Morris aspect of it, or something else?
Just the fact that there's not a hard price target on, at least as I understand it, on Discovery. Like, it's not just like, hey, you're selling for 25, we're going to buy you for 50. It just would be a lot easier. I haven't looked into it that much, and in terms of trying to play it out, and also just what will the total debt be? What will it sell for that day? I've struggled with that, and that may be a lot of people are struggling with that, and that's maybe why people aren't excited about this merger.
Okay.
Okay, we're coming up close to time here. If anyone has a burning question that you want to get answered in the chat, hit up that super chat. Otherwise, we're going to hunt for maybe one or two more here. Karan, did you see any? I saw you intently looking. Where's Bitcoin Bro? Yeah, I haven't seen Bitcoin Bro in a while. Who knows? Maybe he'll show up next time.
Bitcoin Bro goes back to his basement when Bitcoin's down. So
that's right.
Brad, have you looked into Naked Wines? I see a comment way earlier, like from 10:05 p.m. from Jay Luke.
Yep.
Says just bought some shares of Naked Wines. I think people just like saying that, and that's why you guys talk about it.
It's a great name. It's a great name. Yeah.
Usually that's what happens after you drink the wine. I'm doing a lot of digging into Naked Wines that Norbert Liu owns. Seems to have a win-win dynamic. and Nick Sleep's scaled economy shared.
Yeah, Elliot Turner also owns Naked Wines, who's kind of a big name on Twitter. And I think, if I'm not mistaken, Greg Alexander owns some Naked Wines as well. So there's some, is that right? I need to check that because that sounds kind of crazy to me as I say it.
Is that Conifer?
Yeah, Conifer.
And would that show up? I can get it right here. That would show up in a 13F?
No, because it's a UK company. Yeah.
Gotcha. So what is Naked Wine's story? Like why do so many people talk about it and like it?
Yeah, so Naked Wines, yeah, he does. Greg Alexander owns it. So it's basically farm to consumer kind of direct shipping of wines. Okay, so Naked Wines built this platform where wine producers, vineyards can plug into it and ship their product directly to customers. So it cuts out a lot of the costs of dealing with middlemen in alcohol sales. It's headquartered in the UK. It sounds like they really want to move it over to the US in Napa, which is really close to where I live, because there's a much bigger market to grow into over here than there is in the UK. One thing I didn't love about it is that the founder, is kind of stepping back. He's happy in the UK, and so he stepped down as CEO. And it's hard for me to get comfortable with this new CEO and the transition over to the U.S. And I don't drink wine, so that's a big part of the issue here. Is I can't gauge what kind of a quality of product they have. I mean, if you put a $10 bottle of wine in front of me and a $100 bottle, and you blindfold me, I can't tell you which is which. I have no taste for wine. Mm-hmm. So that's part of what kind of discouraged me from going deeper. I'm just not all that interested in the product. So I didn't do too much work on it, but there's a lot of good stuff out there.
Yeah, that's one of those. Go ahead, Karan.
Yeah, Brad, your green juices though.
I drink green juice. I drink cider, apple cider, hard apple cider. If it was a cider business, I would be digging into it, but it's not. So
it sounds like one of those situations where you see smart investors buying something, and I guess the story is they're going to have a lot of growth because if they can get to the United States. But when you're sitting there just doing your investing work, it's like, well, what insights do I have on their chances that it's going to work out in the United States?
Right.
I see a question from 1030 from Ba Hucha. After the Q3 13F, did you buy any companies? And Karan, you were asking if we bought recently. Very busy these days.
Question about that.
Yeah.
Yeah. Did anyone buy? I mean, what are your thoughts on Li Lu buying Berkshire Hathaway? I found that to be interesting. I mean,
so I bought a lot after the 13F. I just, like I was saying, I'm so busy these days. I had kind of forgotten. But yeah, I bought Berkshire Hathaway, a small position. I've owned it before in the past. Why, Brad? You stir things up on your YouTube channel. Talking about Li Lu is going to be the CEO of Berkshire. Was that your YouTube channel or was that?
Yeah, I said that. Yeah.
Yeah, I was thinking, man, that would be cool. But yeah, I
Chinese Warren Buffett.
I mean, maybe he just thought it was cheap. The only kind of different thought I have about Berkshire is if the economy crashes, if the market crashes, that's like one company that I think is going to thrive because finally, after like a decade now, prices will actually be at levels that Buffett wants to dig in at. And it just feels like there's some pent up energy there, and the amount of cash they have. They could get probably some amazing steals if we have a real panic that lasts for more than a month. So maybe he thinks everything's expensive and it's kind of a hedge against that. That would only be my thought. I sure feel good being in that stock. I have zero concerns about negative outcomes with that.
Yeah.
Brad, have you added or do you?
I haven't bought anything since the 13Fs came out, but there's some really interesting positions or companies that I want to dig into. Semler Scientific is one of them. I want to spend some time with Coinbase as well. Those are two that kind of jump to the front of my mind.
Why Coinbase?
Why Coinbase? I see it as a pick and shovels play on the booming crypto economy.
And if it stops booming,
well, then
that's where I'd be worried.
On the
Then maybe-
Guy Spear recap, didn't you?
What's that?
You talked about it on the Guy Spear recap, the Kolkata recap that you did, was it?
Yeah.
Was it some other video? I don't remember.
Yeah, he talks about it in there. I was interested in it before I heard him talk about it, but it's something I want to dig into. It's not necessarily something that I'm going to go all in on or anything like that. Part of it is I just want to expand my knowledge in that space in terms of, I think there's just it's a burgeoning industry, and there's a lot there. I think that's poised to disrupt a lot of the kind of entrenched players today. Guy Spear talks about that, and I think he's right. And I think, a lot of value investors don't even want to go there. And I think that is probably a mistake to not at least learn about this stuff. Invest. I don't even think I could call it investing at this point. It's a lot of speculation. But I think there's a lot there. I mean, it's a incredible technological innovation, Bitcoin and blockchain. So
The digital money aspect of it.
yeah, digital money, the ability to trust people that you don't know, sending payments back and forth, not having an intermediary like a bank. It's going to really disrupt some things.
So I bought a few companies. One of them is actually a real position that I've built up over this year, and the rest are just like, hey, I'm just going to do a direct clone and just copy and with a very small amount of capital, and then maybe look into them more over time. But the one that I bought added to my real position was Change Healthcare. That is a clone of David Abrams, who's an investor from I think Massachusetts. I think he had worked for Seth Klarman at some point, or came up at the same time or something like that. And I read a Wall Street Journal profile on him a few years ago, and then it seemed like my kind of investor, and I've watched his results, and they've been awesome. And so I've been cloning him. And Change Healthcare, it's like the simplest investment ever. At the beginning of 2021, United Healthcare announced that they were going to buy Change Healthcare for, I think it's like $26 a share, like $25.75. And throughout the year, the stock price at the time, it shot up from like $12 to $14 to like 20 because it on the merger news. And then since then, it kind of has set at like $20, $21, $22. And the price where it is now, if you were to buy it at like $20, $21, $22, and then in the first quarter of next year, they get bought for $25.75, you're going to get like an annualized return of like 60 something percent. And so for me, I have enough conviction if this super investor has bought it like 3 quarters in a row at basically the price it is now, for me, that's enough conviction and kind of faith that the merger will go through. And so that's something I bought. And then interesting one, I also cloned David Abrams in Coupang. I'm not sure if I'm saying that right, but
Coupang.
Okay,
Yep.
So the Amazon of South Korea, fair to say, I think, is their business.
That was Druck bought into that too, I think, right?
Yeah, I think so. And
Yeah.
it was a small position for David Abrams, but he's in there. And you look at that stock ticker, it's down 50% basically since they went public here in the United States. And another interesting one, I bought Herbalife,
Ooh.
a Cliff Sosin clone. And that stock price, I think, has dropped 50% in recent months. I think I was able to buy it at similar prices he bought it at. He has been a long-term holder in that, and I'm wanting to dig into more of that company, and that might become a big position because it's got the kind of value investing characteristics. seems to be pretty cheap. Insiders are buying, Cliff Sosin's buying, and definitely a company that the market can misunderstand. And so I'm kind of enthusiastic about jumping into that company and doing a lot of research.
So Herbalife is the same company that Ackman was shorting, and there were a lot of allegations made at that point where they're taking advantage of a lot of minorities. So is that still the case, or has anything changed?
I don't think it. I think all that basically got cleared up, or it's not as much of a concern anymore. I think I saw a Cliff Sosin interview the other day where he actually said that, I don't want to put words in his mouth, but my memory of what I watched is he basically said that that's where he first got the idea for Herbalife and looked into it based on Bill Ackman's Bear presentation. That made him dig into the company when it came across his radar, and then he was like, no, I actually like it. And I don't know where I saw this, but I think he said he interviewed actual business owners that are in Herbalife and was confident that no, it's not a fraud, not a scam, and people are making money and doing well from that company. And so it's a very interesting situation. And I just saw today on Open Insider, he bought more Party City as a 10% holder, and he bought more Cardlytics in the 60s as a 10% holder. So he's someone that I very much follow and clone, and he's someone that makes big bets and big positions and seems to hold them for a while in a lot of cases. So, and he also talks about his thinking in YouTube interviews and stuff like that.
Well, we'll have to try to get him on then.
Yeah, he's definitely has done YouTube interviews. I would love for someone to interview him about Herbalife or some of his other positions.
Cool.
Still a scam, just legal, says Eric. Well, Eric, people disagree.
Yes, they do. Yes, they do. So we're coming up on time here, guys. Anybody else want to throw out any last things here before we?
Well, this is the Alibaba show, right? The Friday night Alibaba fireside chat. Isn't that what we do
Is
here?
it? I don't know. Is it in the title? I don't remember it being in the title.
I know that
next week's episode, right? Isn't it?
Every week when I'm in the comments, Alibaba's in there a lot, and tonight's in there a lot. I saw a comment that said someone thinks that Pabrai sold in the U.S. is buying in Hong Kong. Brad shakes his head no, but I got to tell you, I sold my Baba stock in the U.S. and bought it back in Hong Kong because I am I'm not a little concerned. I'm very concerned that that they could be delisted here in the U.S. And I know people say, well, that doesn't matter at all. You still own the business. But it happened today, I think, with this Didi company, their version of Uber. And I am getting myself prepared. If they don't do the accounting things that the SEC wants them to do, and if by like 2024, 2025, Baba gets delisted from the New York Stock Exchange, there could be a massive opportunity because that could just throw tons of like chaos into that stock price, and it could trade for reasons that have nothing to do with their e-commerce business or their other businesses. And if that happens, it could be a big opportunity. So, but yeah, did Monish do that? Initially, I thought no, that he didn't do it. He went and bought Tencent or Prosus. But the more I think about it, the more I think, like with this Didi situation, like, yeah, maybe he did. But the thing is, there's absolutely no way to know.
There's no way of knowing.
Yeah, no way to know. People did not like my Herbalife comment, guys. I just,
you know what? It's okay, Jason. We welcome adversity.
You enjoy it when someone doesn't agree with you. I mean,
they're taking shots. You know, they said they're going to throw their dinner at me. They
well,
said
that's one more dinner for you, man. I wish
you.
I don't like what that guy eats, but Herbalife, people really care that much. Like I thought.
Have you seen the documentary?
No, I don't watch things that disagree with my outlook. No, a documentary. I mean, then I got to ask, like, who's making the documentary? You know?
I mean, it's clearly one-sided. Like they're painting
Yeah.
Herbalife in a certain light. But
Sure.
So Aaron says China is pushing for the delisting of DD, not the SEC. That's true.
exactly, yeah, that's also
true,
my thought.
yeah.
It's China that's doing it. It's not from the American regulators. So
Cool.
I don't know. I think the last company that would delist is Baba. Like that'll be the last company standing, essentially.
Well, from China's perspective, if they want people to invest in China, it doesn't make sense to me why they would do something like that with a
Yeah.
company like Alibaba. And then from the U.S. perspective, I know the SEC wants more insight into their accounting and all that and stricter standards, but that would make a lot of American investors very angry. And I think a lot of American investors would say, like, yeah, like, let us invest what we want to invest in. You don't need to kind of like watch out for us, but who knows?
could even
We'll
trade on
find
the
out in a
OTC.
few years. What'd you
Yeah,
say,
they
Karan?
could trade on the OTC markets, even if not on the
True.
exchange. You could still, like the same way Process does.
True, but if that did happen, my bet would be that stock price would drop like a tank, drop like a rock the day it got delisted, because so many people would just be like, I'm scared, or maybe a lot of institutional people would say we're not allowed to trade over the counter. So it just seems like it would be bad news.
It would be, but I mean, it's not happening today, so yeah.
Definitely.
Cool, guys. Well, I think it's probably a good place to stop. Jason, thank you so much for joining us today and bringing a little heat into the conversation as well.
Brad, honestly, you can watch this back. It was not my heat. You are radiating tonight, and I hope you have a good time with that and everything works out good.
Appreciate that.
Yep.
All right, guys. We will see you all next week. And until then, keep compounding. Take care.